So first I will give a little bit of background about myself and about Cooley, because it is a bit unique, and maybe explain why there's an attorney here at all versus what even an Edtech attorney is. A question that I don't even know that my wife quite knows the answer to. So my name is Matt Johnson. I'm an attorney at Cooley. Cooley is headquartered in the San Francisco Bay Area and in Palo Alto. We have 15 offices around the world, and mostly in the US, China, and Europe. And I am part of their education group, an Edtech group. And so what that actually means is, unlike a lot of firms that have practices that are centered around certain legal areas like litigation or corporate M&A or intellectual property, we do have those, but we also have sector verticals where you will have groups of attorneys that are focused on specific industries or sectors, and you're more tasked with gaining a general expertise and knowledge of that sector and the variety of legal issues that participants in those sectors can face. So companies, from emerging companies up through publicly traded companies, investors at all stages, schools to some extent, and others that are involved in the education space, and kind of getting to know the variety of issues that they can deal with, which goes from basics of raising venture capital, corporate formation and structure, dealing with employees, dealing with intellectual property, privacy and data, and contracting with schools, a whole variety of issues. We have, as this kind of shows, we have offices in 15 cities around the world. We have clients in over 90 countries. My focus is going to be talking about our experience in Edtech in the three kind of core geographic areas that we do have that practice. So while we represent clients around the world, including many from Israel, our focus is on advising those companies when they're looking to participate in those markets where we have offices, which are the US, China, EU, and UK. I do also, though, I did add to the slide placeholder on India. I am not an expert on India, but I think, given the rise of the Indian Edtech market, it would be not right to have a discussion about this without that on there. So I'm also interested if there's other thoughts out there about it. So operating cross-borders. So one of the things that I've heard time and again, both here and elsewhere, talking with Israeli Edtech companies and entrepreneurs, is that there is, I think, a somewhat unique focus in that when you're building a company, you're trying to scale it, looking across borders is a requirement. If you want to build a company at scale, you need to do that. And that is not necessarily the case for companies that are based in China or even sometimes in the US. And I think it creates, a significant opportunity to be looking at that from a very early stage. There are, I think, growing marketplaces in a lot of these locations, including India, including Latin America, and kind of thinking about where you want to go at an early stage makes a lot of sense because they are very different markets. And as you'll see when we get into this, while there are a lot of opportunities, there's a lot of development, there's a lot of growth. This is a space where once you cross borders and you cross different regulatory regimes and a bunch of other factors, it can be complicated. And so diving in without having some, not just background, but really experience with that sector can be quite difficult. But I think ultimately what is also interesting is that education is a global, it's a global need, it's a global demand, and I think at certain sectors, even some of the cultural differences, some of the things that we'll talk about do go away or they are reduced, and I think that there is an increased appetite for that. So, yes. So I waited to put that up because I didn't really want the obstacles to look much bigger than the opportunities. I think there's two reasons that is the case. One is I think that there are a lot of obstacles, and we don't want to minimize them because addressing them head on is the best way. The other thing is at least I've been told this, as an attorney, you sometimes get a bit of a cynical point of view about things, and you're always looking for the troubles. I blame it on the clients. In that, typically the calls that you get, usually Friday afternoon, are not just because someone wants to talk, it's because there's some issue that they're encountering. So maybe that weights into it. But I mean, there are significant obstacles, right? So thinking about, when you're looking at where to go, where do you want to raise funds? What are the sorts of investors you're looking for? If you're looking to raise funds in the U.S., typically you're going to be looking for they're going to be looking for some sort of presence in the U.S. Same thing in Europe, same thing in China. Privacy and data rights and transfer and what you can do with data varies greatly depending on what market you're going into. Data usage rights are much more flexible in China than they are in Europe, for sure, and increasingly in the U.S. If you're looking to develop a data selling arrangement for powering your revenue in Europe or in the US, it's probably not going to work in education. It could in China. Intellectual property is another thing. If you are, I guess on the converse side, if what is really driving you and what sets you apart and what makes you unique is your intellectual property, going into the Chinese market can present challenges to that. Some of the legal and cultural implications of intellectual property protection that are in place in Europe and the United States are not quite the same in China, and we'll talk a little bit more about what that means in a little bit. Partnerships. So typically, if you're entering a market, one of the ways that you're going to do that is you're going to be partnering with someone who's already working in that market. So finding the right partners and assessing what those types of bargains are, and whether or not the trade-offs and what you are getting out of that partnership, how that relates to what you're potentially giving up. Trade issues and I guess just generally geopolitical issues can get involved as well right now, both I think beneficially as well as potentially challenging. And I should say, crossing borders between the U.S. and China has always been a bit of a challenge. It is a bit more so right at the moment. We have seen a significant decline in the in investments, in operations between U.S. and China, obviously over the past couple of years and significantly over the past year or so as political and trade tensions have increased there. And that seems to be something that is going to continue at least in the near term. And I say that with the caveat that I haven't checked Twitter recently, so I'm not quite sure what the policy is, but it seems that that's going to continue to be a case. Tax issues you should be thinking about as well, and how you structure a company could matter significantly depending on where you want to operate. If you want to operate in China and you want to actually get that money out of China, there are ways to do it, but it is much more complex than it would be if you're looking to operate in other locations. And then obviously, sort of non-legal differences as well will play a huge role, particularly in something as important as education. There are significant cultural differences regarding the how education is delivered, how families and schools and others are structured and set up, and how they like to spend money on education. It varies significantly. Language is always a barrier. If you're looking to go to China, you need to have, unless you're doing English language learning, which is a very hot market there that we'll talk about, but even still, you need to have native Chinese language built into your product. In the US, English, obviously. In Europe, it can really significantly vary. And the markets themselves, what areas are really hot and what areas are maybe not so hot, also varies significantly. Okay, so these are all just my personal opinions on kind of digging into each of these three markets just a little bit. So I'm going to start with the U.S. It's the one that I'm definitely the most familiar with, and I'll caveat here that I am not claiming to be the expert on any of these topics. These are our experience, and certainly I am open and actually looking forward to hopefully being challenged on some of these things. And if you think that there are things that are missing or want to talk more about, jump in anytime. So U.S., kind of looking at what do we see as being really hot markets there and what maybe not so much right now. The companies that are doing really well, both from a revenue side as well as from an investment perspective, are typically at once you get outside of traditional K-12. So to some extent, companies that are working with higher education institutions, what's called OPMs that you may have heard of, are doing relatively well in developing, bringing content from traditional universities online to really compete with what had historically been really the domain of for-profit online educational institutions like the University of Phoenix and others. The traditional institutions, through companies like 2U, Coursera, and others, are starting to move more of their content online, and it's been not without some controversy because they have been quite profitable, and there's a political current in some parts of the U.S. that making profit on education in any way is not good, but moving beyond sort of that segment of the policy side, there has been a strong success rate with these types of arrangements working with higher education institutions. There's more companies getting involved in this, and typically they're done on a revenue share basis, which is great for the universities because they are taking essentially zero risk when the company is covering the costs and then just sharing the revenue back to them. Adult learning, lifelong learning, career, reskilling, and upskilling, all of these terms that you hear, I think probably the current hottest market in the U.S. I think that the demand is really no different than it is anywhere else, but there are a lot of adults that need either to continue on to improve in their current job, to stay current with the latest skills, to get promotions, or to change careers. As jobs change, as automation changes the way people are working, that I think there's clear view that is going to be a key demand. How it's being addressed is very different. You have some that are corporate training focused, and then you have others that are much more individually focused. So you've seen a rise of what we call coding academies or coding boot camps that are really focused on computer science-based skills that are either online or in person, but they're focused to provide intense practical training to students over a course of sometimes just weeks or months, maybe a year at most, to provide them the key computer science and coding skills that they need, sometimes having some background in it, sometimes not having any background in it, to bring them up to speed on those jobs. And then you'll see others that are working either with employers directly, so working with particularly ones that are in the services industry where it's really expected that jobs will be changing very soon. So that's another area that I think is still growing. And then the other one that I found is interesting is at the K-12 level and at the early childhood level. Unlike China, almost the exact opposite, content and curriculum and consumer-based applications have not really taken off. There are exceptions to that for sure, but they're kind of the exception and not the rule right now. But what you do see is companies that are providing back office support, so not really involved in the classroom itself or in the curriculum, but helping with teacher management or helping school districts manage their data, their special education plans and things like that, have been very successful because districts are looking to bring in solutions to help streamline those things, help reduce costs overall, and help them more efficiently manage their resources because their budgets are constrained. And it's typically, if you're going in there and saying, I have this great additional product, and even if it's reasonably priced, that hasn't really been selling. What has been selling in the US is, I can provide you the solution that will cut your costs overall. And that's been key. So it's a pretty, I framed the market as simmering in that I feel like it's been pretty consistent. There's been a generally upward trend in investment, both in the number of deals to some extent, but more so on the total amount that's being invested. What we have seen is that US investors, I think maybe more so than in Europe right now, have really started to be interested in investing larger amounts. So when you use terms like seed investment or an A round or a B round, those terms really don't mean anything because the actual amount of money that is being invested changes seemingly daily. So every time I have a discussion with an investor and we're talking about what they're doing, and we talk about, oh, they're looking to invest in seed or pre-seed or Series A, I always ask, what does that mean in dollars? Because when you ask them one time, it's going to be different than the next time. You are interestingly seeing a gap develop. So what used to be a Series A was probably around, maybe 2 to 5 million or so was a Series A round, maybe 2 years ago or so. That is now, an A round now is probably closer to 7 to 10 or maybe even more million. Seed rounds have maybe increased a little bit, but what I have seen is there is that gap, right? So when you're looking for investments from US investors, there is a developing gap between getting from seed stage investors, angel investors, family offices, those types of smaller, call it 500,000 to 1.5 million, and then bridging from there to that A round. There's just a bit of a gap in funding there right now that is not unique to education or ed tech. I think it's sort of endemic in Silicon Valley investing in general right now. But I ask that question every time I talk to an investor. I think that it is that those types of deals, one, I think you're seeing a number of the institutional VCs that want to invest more at a later point in the company, and they've kind of just redefined what an A round is. But at that point, they're looking to actually see more results. So you're seeing fewer investors that are really interested in taking the risks of what you're looking for when you're investing $1 million or 1.5, because when you're investing that amount, you're basing it on promise, you're basing it on betting on the entrepreneur, on the team, not based on any results probably, right? They're not generating a profit or even revenue, and you're looking at, I think a little bit of a risk aversion there. And I know others would challenge that view, that there are other reasons, but that's my take. Is there? Definitely. So, yes. So, good question. And I think what actually I think is probably a benefit here for education is that while there is still this gap that you see everywhere else, and it's, I don't actually think it's worsening quite the same in the U.S. that it is, in ed tech that it is in other sectors, in that I think you are starting to see an infill happening, that there are investors that are now institutional investors that are running smaller funds that are interested in bridging that gap. There, I would say, 2 or 3 that have kind of really sort of started to work in the U.S. Right in that space. To name a few that we've worked with, that we've been seeing doing that, a group called Bisque Ventures based in San Francisco is starting to get more involved in that space. And so is Learn Capital actually started an earlier stage fund to start investing more in that space. And then there's another group actually based out of Tokyo that's fully involved in the US that has now started making investments called EduLab Partners. So you're starting to see that fill in, which I actually, and again, I'm focused on education, but talking with colleagues that are in other spaces, haven't seen that. So I think it's actually a positive difference. Yeah. Simmering, and I was trying to like work with the wording there. So simmering sounds probably anticlimactic or underwhelming. I actually maybe consistent, or I would say it's consistent growth, right? The market is growing, more dollars are coming into it. There was, it really took off, let's say 2014, 2015, where you had a significant sort of boom into Edtech, followed subsequently by a lot of people losing a lot of money very quickly, and then a market cool down that kind of followed that. I think what you see now is you see more investment by investors who are strategic about it, that they now know that Edtech investing is not necessarily like investing in fintech, and the types of results that you should expect to see are not going to be the same as what you would expect to see from a fintech company, and so your valuation should be different, and your expectations, the length of your investment, you should probably be looking for a longer term investment than you otherwise would be, and you're starting to see more recognition of that now than what you did before. So regulatory. So this is the part that I kind of focus on the most. In the U.S., what are the regulatory complexities? And one of the things that I think is maybe challenging to people who are coming from outside the U.S., particularly from maybe someplace like Israel, where I would suspect this may not quite be the case, but you're dealing with essentially 51 different governments. So it's basically, to some extent, as difficult as dealing with 51 different countries that, fortunately do all speak generally the same language. But from a political as well as a regulatory perspective, they can be quite different. So operating in California is very different to some extent than operating in Utah, which is not too far away, but it is. And the challenging part, I would also say, on education is that the states that you probably would be most interested in operating in, California, New York, maybe Texas, a few others that are high population, significant interest in education, are also probably the toughest to get into. There's some benefits and drawbacks to that. So typically what we say is, from a student regulatory, privacy, education regulatory perspective, maybe it's actually not a bad thing to aim toward California first, because one, it's a great market for that. And also, if you can meet their standards, typically you're probably going to be generally good everywhere else, except maybe New York, maybe Massachusetts. But focusing in on that, and it's a bit to bite off because it's a lot of things that you have to be doing right off the bat, and it's increasing every day. So California just passed their version of GDPR, essentially taking some parts of GDPR that are maybe not quite as severe, and some parts that are actually much more significant than what is now in place in Europe. That's applicable if you're collecting any data on California residents. There's, on top of that, a student privacy law that doesn't quite align with that bill, but you have to comply with as well if you're in the K-12 space. So it's a significant regulatory environment, but that shouldn't shy away, I think, it shouldn't cause anyone to necessarily shy away from the opportunities there. It's just something that, particularly from an early stage, and I'll talk about this a little bit more when we get to Europe, but probably your top issue is thinking about data usage, what you're collecting, how you're using it, how you're sharing it, and how that factors into your business model. Typically most companies can successfully design a way to manage these risks and manage these requirements, but it requires that forethought at an earlier stage. It's much easier than trying to retrofit it later. And then I just noted kind of where I was thinking, we're starting to see some interest, and this is based partly anecdotally on where we're seeing some investments, and also partly on what investors are telling us. But some big issues that are really interesting. Cybersecurity, and actually cybersecurity education is, I think, something that is of significant interest moving forward, both at the corporate level as well as integrating into higher education and elsewhere. And then, figuring out more about higher education credentialing is something that I think there's a strong interest in, obviously a lot of resistance as well. So I'm going to move on just because I want to make sure we have, there we go. So China, to some extent for what are still, I think, the two biggest edtech markets, although now India is certainly right up there as well. What I find fascinating about the US and China is they are, to some extent, almost polar opposites when it comes to the types of companies that can be successful in them. And I say that for a couple of reasons. So, in the US, we talked a lot about interest in, upskilling, career and workforce training, as well as back office support for schools and districts. There is no market really for either of those right now in China. So I think on the first one, on career upskilling and retraining, that's sort of a universal need that I think is going to have to develop everywhere, including in China. There is going to be a population that is going to need to go through that same process and gain those same skills over time, but that market just isn't there right now. The focus is very heavily on early childhood and younger students, so kind of that, from birth up until they're getting ready to go to college, and particularly at the early stage. And it's very consumer focused. So public schools in China are not really typically a client or a potential customer. Just one, to the extent that they have funding, they don't really spend it on technology like this. And then secondly, the regulatory and bureaucratic part of going through that process is difficult. Even private schools in China, from my understanding, are not really too focused on providing, these sort of technical, outsourcing these sort of, technology solutions that they are in the US. It's actually quite the inverse, that there's a strong consumer demand. So parents buying these products for their children. So the big success story right now in China is VIP Kid, and it's that, it's the parents subscribing for their children to learn English language learning from the US and other teachers. And that's the type of model that is currently very successful there. It's interesting, parents are, it's customary to spend a significant part of your disposable income on supplemental learning for your children. Where in the US that really is not the case. Most parents don't. They expect the school districts to actually provide those sorts of things, and parents in the US spend their money on other extracurricular activities like piano lessons or soccer or football, I should say, and not necessarily supplemental education. It's I think still the hottest market out there. I think it's fair to say that it's cooling off a little bit, and I think that is the case for a lot of reasons. But it's the case that it is. And I'm going to talk quickly because I do want to get to Europe really quick, and I know we're going to try to keep this on time. But quickly, the regulatory conditions, you basically have to have a joint venture. You have to coordinate with a local company for the most part if you're going to get involved in education. It creates potentially significant risks to your IP. So if the IP is your secret sauce, if it is what makes you different and differentiates you from your competition, China may not be the market for you to get into. But there's a lot of growth opportunities there. It's the hugest consumer market right now in the world. And particularly, I would say, for non-US companies, for Israeli companies, for European companies, the current trade disputes between the US and China, I think, actually does provide an opportunity because I think that there is an interest in looking elsewhere for filling in those gaps. So then quickly, Europe. I'm actually going to skip here. I think it's a warming market. It's certainly well behind the other two that we talked about. And I think that it is growing, though. I think that there is, it's where I think maybe the US was a few years ago, and I think it is starting to increase in both the amount of venture capital investment you're seeing, the number of companies that are coming up. But it's a difficult market because as much as maybe I said that the US has 51 different countries, but at least they speak the same language, that's not the case in Europe. And so anything that you're going to scale is challenging even just from a language perspective. And then I would just say that when I'm talking about regulatory conditions, the two obviously that come to mind that are going to be challenges for everyone, both those in Europe and those operating outside of Europe that want to enter the market. GDPR, the strictest privacy rules in the world currently, is just a challenge to be able to comply with. Even if you are intent on providing top-of-the-line data security, that doesn't mean that you comply with GDPR. There are a lot of things that you have to build in from an early stage, and so it makes things like the concept of privacy by design very important in actually building it into what you're doing. And then Brexit and just general uncertainty as to what that means both for the future of the UK and their participation in the European marketplace, as well as what it could mean for just generally in Europe and the trends of the European Union. Right now, there's just a lot of question marks about what that means, and I think that does impact investment. That does impact the ability to operate and to scale, and depending on where you're going to focus, are you going to focus on the UK? Are you going to focus on the EU? And what does that mean? Can you focus on both? But at the same time, I will take the view that this isn't a typo. I do really think that the growth opportunities are also presented by those two. And this is sort of, I think, particularly for Israeli companies where I see that to be the case. Because I do see that the strong interest in cybersecurity and data security that GDPR implements to be a key potential driver for companies that are in that space. And this is one of the leading markets for companies that are in the cybersecurity and data security space and cyber education. And then also, again, just like the same reasons why trade disputes between China and the US, I think presents an opportunity for those outside. I think Brexit may actually provide the same. For those that are thinking entrepreneurially and can see some paths there, I have heard some thoughts that can actually be a benefit for those that are not in Europe but looking to get into there. So with that, I know I'm out of time, and I know we also want to keep things going. I'm happy to keep discussing these outside over lunch or at another time, so please reach out, and thanks for joining.